Markets closed at fresh all time highs last week, but honestly, I think a lot of traders are starting to get confused by this rally because this wasn't just a straight move higher. Palantir crushed the earnings, but it got destroyed. AMD exploded 19%, then sold off, then ripped again in 2 days later. The jobs report came in way hotter than expected, and the market still pushed to fresh highs, anyways. And now the big question heading into next week is, does this rally still have room to run? Or are we getting dangerously overcrowded up here? Because after six straight green weeks on the Qs and S&P, chasing momentum gets a lot trickier. So today I want to zoom out a little bit. We'll talk about what actually mattered last week, why Sammy's completely controlled the tape, and the one thing I think could change the tone of this market next week. And if you find this useful, consider subscribing because once you understand where money was actually flowing last week, next week's setup and the key levels traders will be watching start making a lot more sense, especially if you are trading short term momentum moves instead of long term investing. Now, let's start with the biggest lesson from last entire week. This market is no longer rewarding good companies, it's rewarding new information. That's the shift. Palantir proved it first. The company reported great earnings, revenue growth was strong, guidance got raised, and the stock still dropped almost 7% the next day. Why? Because expectations had already gotten too high before earnings even came out. The move was already priced in. Then AMD did exact same thing in reverse. Wednesday the stock exploded after earnings. Thursday Goldman raised the price target and AMD still sold off 3%. Again, good news, bad reaction, but then Friday happened. Rackspace announced a major AI infrastructure partnership with AMD, and suddenly the stock ripped higher again. That reaction mattered because that was new information, not another analyst target, not another CNBC headline, actual new demand entering the story. And honestly, that's probably the cleanest explanation for this entire market right now. This rally is rewarding surprise, not confirmation. That's why some names are exploding higher, while other good companies are getting sold immediately after earnings. Now, outside of semis, the macro backdrop also helped bulls a lot last week. Friday's job report came in much stronger than expected. 115,000 jobs were added versus the expectations of 55,000. But at the same time, wage growth actually came in cooler than expected. And that combination was basically perfect for the market. Strong enough to say economy isn't rolling over, but soft enough to stop traders from panicking about the Fed getting aggressive again. That's why the S&P pushed to another all-time high. Nasdaq ripped, Russell participated too. This wasn't just mega cap tech dragging the market anymore. Risk appetite broadened again. But now, if we get into next week, that's coming up, and honestly, this is where things get more dangerous because next week is CPI week. Tuesday morning, inflation data drops, then PPI right after that on Wednesday. And after six straight green weeks, the margin for error gets smaller. If inflation comes in hotter than expected, yields probably move higher again, and that's where some of these extended momentum names could actually start seeing some pressure, especially semis. Because whether people realize it or not, semis basically became the market's mood ring last week. When semis ripped, the market ripped. When semis pulled back Thursday, the market cooled off immediately. Then Friday, semis bounced again, and risk appetite came right after back. The risk appetite came right back. That group is leading this tape right now. So heading into next week, I think the biggest thing traders need to watch is whether buyers continue defending these breakout levels on pullbacks, or whether momentum finally starts fading underneath the surface. Friday night, there were some reports of military exchanges again near the Strait of Hormuz, and the market mostly ignored it. But if oil suddenly spikes back over 100 next week, inflation expectations change very quickly. And if inflation expectations change, this market changes with it. So that's really the setup heading into tomorrow. Momentum is still strong, semis are still leading, buyers are still defending breakouts, but next week probably becomes the first real stress test this rally has faced in a while. And that's exactly why CPI Tuesday matter so much. And that was the recap of last week. So I won't be posting any levels to watch out for heading into next week. Um, Rather than posting them every day, I could just post them whenever, every second day or something like that. Or if you want me to be posting those levels, if those levels are actually useful, please let me know. Um, Last week, or since 2 weeks, we have been talking about levels, and all of those levels hit our target. Like some of those levels, if anyone was following along, some of those were like 150% returns on some of those levels. Again, like if you want me to be posting levels as well along with the market recap, I will do it. But this video was all about recapping what happened last week and how we can prepare ourselves heading into next week. I hope you found this information useful. I'll see you in the next one. Take care.